A former subprime player claims he can now short the mortgage market for climate and COVID risks. Huh. So this is one of the dudes. His name is Dave Burt, and it's kind of a heady article, but it's over on CNBC if you want to see it. But he's one of the guys that was part of the, if you didn't see the movie The Big Short, you need to go. The Big Short, The Big Short, you need to go watch that movie. And what was behind that. But he was one of these dudes. I don't think he's featured in the movie, or maybe he's, they changed names and he was, I don't know. But anyway, so he's a financial analyst who looks at risk in real estate derivatives markets. That's what he was doing back in 2005, analyzing vast pools of subprime mortgage bonds that Wall Street was creating and trading. He examined the homes and borrowers who owned them. So this is a quote from him. I had a strong suspicion that they would go bad. So Burt now says he can do the same thing when it comes to climate risk. So he bet against the subprimes. Now he's saying that he can bet against the market because of climate risk. He says that as the risks of floods, fires, and wind increase, the cost of owning a home will go up. Costs from higher insurance rates, higher taxes, and uninsured losses. As the cost goes up, the value of the home goes down, and consequently, the mortgage on the home is at higher risk of default. Another quote from him, he says, this is going to be much more broadly impactful than just a mortgage story. I think that's a crazy statement. So bigger than the crash that happened 12, 13 years ago. Now, he's using data from Boston-based Risk, which is spelled RISQ, and they are a data analytics firm specializing in climate risk. He's looking at specific areas where home values are likely to fall from climate impacts, causing homeowners to walk away from their mortgage. Burt is essentially profiting off of people's peril. He admits that, with one caveat. And this is a quote from him. He says, honestly, I'm doing this in large part less for the profits and more to make a difference. The subprime mortgage problem, if people had become aware through realization of market losses, which I'm already lost. Like, how are people going to become aware of realization of market losses? But and the problems being created by subprime risk in 2005, 2 million households would not have had to go through foreclosures. Now Burt is adding the Rona to the mix because he believes climate and the Rona together make the bet even bigger. And then he finishes by saying the Rona has created a lot of problems fundamentally for the systems that support the housing market and have potentially been contributing to the mispricing of these climate risks and asset values, namely that insurance premiums are too low. So the story goes into much more detail, but it's over on CNBC.com if you want to see it. But it's interesting. Now, whether you think there's any validity to it or not,
to climate change or to the pricing models?
all of what he's saying, because he's saying to climate, and he doesn't call it climate change,
right?
But also he's saying the Rona, he's adding the Rona in there. But this is a dude that essentially predicted this happening in 2005 and bet against the market. And he does say in there, like he did then, he had to pay for these subprime bonds and he had to hold on to them. So he says, how long can I hold on to this and when will it happen? That's what he's trying to predict, is when will it happen and how long can he hold on to it to then bet against the market. And he does say that if he does make any profit, it's not all for profit. He's going to give away half of it to different charities and donate it all to help make a difference in the cause that he's trying to bring awareness to.
I thought that was an interesting story, even though I didn't hear all of it when I was reading through it earlier. It's interesting to me that investors are playing the COVID and the climate change. I mean, they've been playing the climate change stuff for years, but it's interesting to me that they're relating that into the housing, because so far housing's been all boom and no gloom.
Well, I mean, I always think of insurance this way, is that we pay monthly into these premiums, right? We pay. Technically, that they're using that, to pay out other claims. But if there are, I don't even know what the rates are, but if 90% of it is just coming in as premiums, as your monthly payment, and 10% is going out as actual claims, then they should have, and they should have enough. If all of a sudden there's this big, and it's not going to be, I don't know, in Houston specifically, because Clayton's commenting on the show. They have floods that come in. They have weather to deal with. Same on the Cheese Toast where Melissa lives. They have to deal with these. You can see them coming through the weather predictions, but
right.
To predict the value or the validity of climate change and when it's going to impact and to bet against it, I think that's a pretty broad stroke of the brush, isn't it?
Well, they've been trying to predict it for years and years and years and years and have been wrong a lot. So they've been right.
Well, it's not it's going to happen by this date, but when you watch things, this has changed, that's changed. But then again,
just go back and watch the first Gore movie. That's all I'm saying. Go back and watch the first Gore movie. Now that we're like 20 years beyond that. When was that?
I think it was 2000 or 1990.
Yeah. Just go back and watch all the predictions that they made, and then where we sit today, and just see how you feel about the predictions. I think it's a dangerous game. It's definitely speculative.
Well, it needs to be more awareness instead of predictions,
right?
Because when it's a prediction, people go, "Oh my God!" Everyone thought the world was going to crash, Y2K, right? And then they thought it was going to burn in 2012, right?
But what about when this awareness increases insurance costs by making these little flood, giving you a flood number over there in California? So
I'm just, again, awareness is never a bad thing. It goes into the disclosure thing to me, awareness of it. So if there's data out there saying this scientist says this thing and 1,000 of them agree, I'm going to go read that and then I'm going to make my own decision. But again, where you're saying though, but they're not predictions though.
I'm looking up the Roswell papers now to send to you, Dan.
Yeah.
All right. So let's,
from aliens exist
from scientists. All right. So Doug Johnson says we have 190 resale homes for sale in Ada County, Boise, and surrounding cities. 189 new construction. Never have I seen this. About 1% a month price increasing. That's interesting. So that was on our earlier story. If you're watching this in the Chops version, you go back.
And I believe you got to go back. Now you have to go watch it on the Chops, guys.
Melissa
and I think he's in Idaho, by the way. I think.
Yeah. Let's see. Melissa Mars said, forget weather predictions. Tide charts are even more important. Oh, interesting. Yeah.
Ebbs and flows.
Clayton says, you just need to be right once. Ask Susie.
By the way, it's even better. Her name is spelled S-U-Z-E.
S-U-Z-E. Yeah.
Suze.
Colin JJ Cameron says we have 2 months supply in his immediate area, 126 homes, but 58 of them are new construction. Only about 10 of those are already built. So some of that supply data can feel skewed. In reality, we have just over a month's supply.
Yeah, if you have an active non-built home, you're 2 or 3 months away from right. Is it actually available to buy and move in the next 30 days? No.
That's why I always take out the under contract ones when I'm looking at like they're active but under contract. Yeah, I'll take those out.